Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis on commodities, work our way through the dollar yields, precious metals, and commodities ETFs that follow. If you guys need any help with anything, check out finding-value.com. We've got a question and answer session coming up on Sunday at 5 p.m. If you'd like to join our community and hit me up with questions, go ahead and do that. A lot of it is talking about what I look at, training, stuff like that. We just had a training this past week as well on technical analysis, stock selection, stuff like that. So let's dive in here, give you my financial opinions as we go, and see what the day has brought us. So looking at the dollar first, again, the dollar is being quite resilient here. We've got a nice sideways channel going on, which is above support, which is the big white line going across all the way back to the 70s, the 70s. And again, this is a relative strength indicator is what the DXY is. It's relative to other currencies. It's not an absolute, it's relative. But right now we've been hanging out and this still has the chance to go higher or sideways. But yields, the longer to the curve's been hanging on, the short end looking a little weak. So the dollar's hanging on. We're moving sideways with the dollar in terms of its relative strength. The 2-year, we had a kind of a blowout the past 2 days. Now, let's back out a little bit. We could drop here and get that slowdown in the market that I've been talking about. I call it the stimulus overhang. So, what could potentially occur is there's an overhang between the stimulus money that was introduced into the market. It's synthetic money coming into the market called stimulus, and the housing starts kicking back up, and that takes a little bit of time for that inflation to come back into the system. There's a gap between the two. I know there's a lot of fiscal spending going on as well. So this period that we're entering, 2024, we could see a slowdown in certain things. I think that's why oil has pulled back and kind of acting kind of weird lately, is what I'll say. But it could be hidden by money printing and fiscal printing that on a nominal basis, it'll kind of just get papered over to some extent. But short term, this does look like we want to go lower on the 2-year yield. I mean, that looks pretty strong for a weekly candlestick, and we are definitely building some momentum to the downside on the short end of the curve. The 10-year is holding strong. So the longer end of the curve, the 10 and the 30, we've broken down trends here and it's holding strong. Yeah, we were down today, but this does not look like it wants to fall much further. This looks like it wants to go up. And this is a really weird dynamic with the 10 and 30-year yield looking somewhat stronger and then the 2-year looking pretty weak. And what I mean by stronger, I think the 10-year and 30-year look like it wants to go up at the same time that we have the 2-year looking like it wants to go down. Kind of funky. The 30-year here is kind of broken to the upside here just recently. This looks like it wants to go up, not down. So very interesting dynamics playing on in the bond market and how the yield curve is moving around. We've got the long end being resilient, and we've got the short end being a little wonky, wanting to go down. The TYX TNX ratio, the long end of the curve stayed more firm than the short end, and we catapulted higher here. Is this a breakout? It sure looks like it to me, and we could head higher. Where we get the 10-year, like the 2-year, 10-year, the shorter end of the curve to kind of come down, and the 10-year is not the short end of the curve, but and then the 30-year being more resilient. Very weird dynamics here. So maybe we start to come on up. That'll be a tailwind behind precious metals. And I am very bullish on precious metals. I'm sure you guys have listened to some of my 2024 calls when I was talking to people in 2023. I'm bullish on gold, silver, platinum, palladium, et cetera, et cetera. It's because of this uninverting and the potential slowdown that we could see in 2024. if there is a slowdown. We've got bond prices slightly lower because this is the 20-year. The long end of the curve is kind of pulling back still a little bit on the long end. Very weird dynamics going on here, boys. And then the 2 and 10s, you can see it uninverting here. But here's the thing. Generally, when you see a problem in the market and this uninverts, like we're seeing right now, generally it's the 2-year falling rapidly, which we do have. And then we also generally see the 10-year fall too. So these weaknesses, we saw a weakness occur in 2018 lower. We saw a weakness in 2007. You can see this drop and then the blowout in '08. So that was dropping. We're not really, I mean, we've dropped here, but we're not really dropping on the 10-year with this breakout to the upside and a little bit of a pullback. That still looks like to me that we want to go higher on the 10-year yield. This makes it incredibly weird because you can have this yield curve uninvert and it's almost like the short end of the curve, the 2-year, is pulling back while the 10-year is going up. I don't know. I don't know if we've seen that in history. I'm not sure if we've seen the 2-year go down at the same time that the 10 and the 30 go up. It's called the bear steepener. It happens very rarely, and right now it's happening all the time. So we'll see where this goes. Gold up $32 an ounce. We're right underneath this pattern here. Is this going to fall to the downside? We've got this rising wedge. We've broken out, doing a retest, and are we going to pull back? Or is this going to rip to the upside because the market conditions of the short end of the curve are falling and the long end is being somewhat resilient, which means that the yield curve is uninverting? It's difficult to say. Usually bear steepeners don't last for huge lengths of time in history. They usually last kind of at the end of a inflationary movement, but we're in the middle of an expansion phase of real estate too. It's a weird dynamic. That's all I'll say because it was all stimulus money that created a lot of this stuff. We've got silver up 2.73%, pretty big move for silver, and we're still above that trend line. Trend line is this bottom one, and we're below the resistance line here. This thing is squeezing up, guys. Generally, before a squeeze, you'll see a big move. I think the move is going to break to the upside. That would be my guess, based off of how we entered all this stuff in here. And we could see a big move at some point here very soon. Platinum's holding on. We're down a little bit, and it's holding on down 0.53%. But this, to me, still looks good. We've broken out. We're getting a little return move, and we're also getting a return move on palladium. And I think palladium's trying to bottom here. Give it some time. It'll try to bottom, and it'll work its way on up. That's my guess because we have a big falling wedge right before it. So that also looks decent from a charting perspective. XE to gold ratio, we saw gold and silver mining companies outperforming gold, and gold had a very good day today, up 1.6%. Are we finally going to get a break of this long-term downtrend line in the ratio? Are we finally going to rocket to the upside? We're going to have to wait and see. The market conditions are quite hazy at the moment. We do have some big bullish engulfings showing up at the bottom here, which is generally bullish for a move higher, which is good. CRV index, we're slightly higher today. We're underneath a little bit of resistance here. That's the resistance line here. We kind of pop down. And I think the market's trying to sort out where rates are going to go. And rates have been highly volatile and shifting back and forth, which is going to create volatility in a lot of the commodities and stocks all around. But it's hanging on right now, right where it's at. Those wicks on the bottom. And then the CRV index, we were flat today. It's also hanging on, just moving sideways at the bottom of this flag pattern that's created this big flag pattern. It's just flapping in the wind, boys. So GDX up 2.8%. It's looking good. If we can continue with that TYX TNX ratio moving higher that I track, I think this will move to the upside. And that's going to go across the board for GDXJ and SILJ. We're right on these trend line resistance lines. that we're at. We're just against resistance on all of these. Crude oil is up 1%. We tried breaking out. We did a little bit of, hey, look, I'm over the trend line, and then came back down. I do think this is going to break to the upside, though. Um, One way that it won't break to the upside is if we actually get a slowdown in the market and demand cools off. But from what I've seen in terms of all of the data that people are gathering, we're going to go up 2 point something million barrels next year. Demand's going higher, not lower. A lot of it's driven by the Asian countries. So I think we're going to break to the upside. That's my bias at this time, and we're at a really cheap ratio to gold, and that ratio is somewhere around 28, 29. 1 ounce, 28, 29 barrels of oil, and that is historically very cheap. So it looks like we're trying to put in a bottom, and we'll see if this actually manifests itself as a bottom. TTF gas up 2.5%. That's looking stronger. We do have the momentum to the downside is still there, and we haven't broken the downtrend yet. So it's still downward momentum. Natural gas in America just ripping today, up 8.5%. And I've got my awesome little fractal here from last bull market. This is the fractal, and it's playing out pretty much to the fractal. The fractal is, again, herd mentality, where the herd or humans interacting with each other created this last bull market chart. And that also occurred under an expansionary phase of real estate, which we're in. And we'll see if we follow this or not. We'll see if we get a big move to the upside for natural gas. And I know we've got cold weather coming, and we're probably going to have a big draw on inventory. Now, looking at XOP, yeah, you know me, holding it together here. It's holding together. And if we see crude oil start to break, I think people will start bidding up XOP. We've got a broken downtrend. It looks like it wants to go higher. I'm very excited for this. We've got this gigantic inverted head and shoulders, which has a price projection on a logarithmic scale up around 840, 840 on this bad boy. I'm pretty, positive on it. And the technicals still look good for that to occur. We're just waiting and cruising down here for crude oil to break out and go. OIH is also getting bought up today, up 1.4%. We're back to that support level. We're getting support right where we're at. We're putting the wick on the bottom on the weekly here. And I think this is a good spot to be looking. A lot of good opportunities in energy service right now where you've got price to free cash flow of under 2. And they've got projections and visibility on higher cash flow in 2024. This is ridiculous, guys. The value in energy service stocks right now is ridiculous in some of these companies. We're talking 10 bagger status, I think, over the bull market, easy to the upside in some of the companies. Now, coming to Sprott Physical Uranium Trust, Jesus, guys. I got the rising wedge in the middle finger. That's saying I'm not going down, I'm rocketing higher. Here's the dailies. That is one heck of a candlestick today, guys. Look at the strength of that candlestick. I want to see, let me put some volume on this on the bottom here. Look at the volume today. Oh, busted. Look at that thing go. Volume through the roof, rip into the upside. This looks fantastic. We can look on the left to see, I wrote this in here. There's going to be a little bit of resistance. Oops, I thought I had it on horizontal here. We'll do a horizontal ray. Yeah, there we go. Horizontal ray. Then we go back to the thing, and you can see the ray was right where we had that resistance. See that resistance where we were hitting it, and then boom, 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 the break. We just wore out the sellers. We wore out the sellers there. That's where the middle finger comes up. And look at that, guys. We're gonna basically be at all-time highs here any second. On a monthly closing basis, if we can close this month out strong, we're probably going to end, if they can go up a little bit more, at an all-time high for the Sprott Physical Uranium Trust, even above the 2007 highs. What does that mean? Well, I don't think people understand there's not much resistance up here. So we could start flying. We're in the fly zone. And when we do all those little charts with all the fractals and all that, it goes up quite easily. So what we want to look at is we hit our head on resistance. Resistance kept us here and held it. We also hit a little bit of resistance here going across, which was that the resistance trying to break through here. And then we broke through it and it's running cheetah style. You know how I like my cheetahs. URA running 7.11% today. Look at that. Oh God, guys, look at that. Look at my fractal I put on here too for URA. Look at that. There's the fly zone, boys. We're right there. What is that? A Boeing 777 or something? No, no, we don't want that. Didn't they get grounded? 787? Some got grounded in Boeing. We don't want that. We want Airbus A380 or something. Or how about Antonov AN225? There we go. But we are ripping here. We've got a big bullish candlestick on the monthly, and we can go weekly here. Look at the week on this thing, from 27 up to $31. Now we may not go straight up. We might get a bloody nose. We might get some consolidation. A lot of people are talking about this gap that we've got here. Oh, it's got to fill the gap. I don't know if it's going to fill the gap or not. Again, I'm not here to play the short term, guys, but this looks fantastic from a longer term perspective. And it's following the fractal that I threw in here from CRK. A lot of people said, "Yeah, no way. There's no way you can do it." Okay, whatever, guys. This is the fractal. We can beat it. It doesn't have to be exactly the same, but the movements are generally similar. What I'll say. URM making all-time highs here. Jesus. We've got big move here. You can see we closed the week out pretty strong. Here's the week. Massive move higher. You can see we bunched up underneath the all-time high here. A little bit of resistance, which is, remember, like I said, it was small down pressure days. And I'm like, the buyers could push this thing at any second. And they did. They did the past few days. See here, 1, 2, 3, 4. This past week we were ripping, and again, this is a beautiful looking candle, and it finished quite strong towards the end of the day. So that looks very constructive there, guys. And then URNJ up 10% today. Jesus, good thing I bought a bunch of it. Um, Looking fantastic. Now this is up there; it's running, and the question that people will have is, should I buy over here? Should I do this? I'm going to tell you guys, I probably wouldn't be chasing some of this. I'd be looking at the stuff that hasn't moved yet. Look at some of the juniors, look at some of the explorers, and if you guys need help in selecting companies, I can give you my opinion, and you're going to have to figure out for yourself what you want to do with it. We'll talk about it during the Sunday question and answer session if you're interested in those particular companies. But I can tell you this too: there's a lot of opportunity out there, just not, in other sectors as well, not just uranium. TAN down a little bit. This one's not getting the love that I guess people think it deserves. I'm not a huge solar fan just for the fact that they don't make any money. Not like the uranium juniors are making any money either, but this is pulling back today, and we're right underneath that resistance support. We do have positive indications of bullish engulfings all kind of at this bottom and some big green army showing up. So we'll see if it can overcome this little pullback there and start to move on up. That would be my guess. COPX up 0.82%. Not a convincing candlestick that we have today, but it still looks good compared to where we're at. Double bottom. This is your downtrend. This is your basing pattern. And then we're going to go up into stage 2, which we're going to get probably a big bull market out of this bad boy. So I still like it quite a bit. Looks good on the monthlies here. And then the weeklies, it doesn't look too bad. It still looks good. Lithium down 1.5%. I know a lot of people who are a part of the solar camp and the renewables. They like lithium quite a bit, but it is selling off. The momentum in the short term is down, but we do have a gaggle of green candlesticks and bullish engulfings all through there. So there's probably good support right where we're at, and we'll see if that holds. REMX is in the same situation. We're right at that support level. We'll see if it holds. And we've had a pretty big pullback here. It does look a little bit strong for maybe even a further pullback in the short term, though. We got to turn this thing around right here, right now, if it's going to do it, but it looks pretty weak, what I'll say. SPX, we're up against that resistance line. There's that resistance line that I'm talking about. We're right up on top of it. And generally, when you get resistance, you'll get selling pressure. And that's what we're getting, some selling pressure. We'll see if we can punch through. NASDAQ, same thing. It's just following, for the most part, the S&P 500. Still looks good to go higher. There's not a ton of selling pressure here. No bearish reversal candlesticks or anything over there. Commercial, so this is the regional banking ETF, still looking good. We're still within the pattern. We're still above support. Support I'm talking about is this one here. It's a double bottom, and it does look good to go higher. And if we get more bank lending in the housing market, I have a feeling that this is going to go way, way, way higher. And if rates come back down, which they kind of are, and I think it's all gonna link up pretty well. Emerging markets up a little bit today, up 0.4%, right on support. I do think the emerging markets, if we get lower rates, will go up because you're going to get a weaker dollar if rates come back down. Now, I don't know what the current mix is necessarily going to do. We've got the short end of the curve coming down and the long end staying, sticky and moving on up even. I don't know what that'll necessarily do to the dollar. Generally, the whole curve goes up and down together to some degree. It's just the short end goes fast, it moves faster than the long end. But it's kind of funky when they go in opposite directions. XHB is down a little bit, but well, we got a little bit of a bearish candlestick today. It's a bearish engulfing. We could have a little bit lower in the short term, but overall, we're basically almost at all-time highs. We've got MU down 0.3%. We're up against support right now. We'll see if that support holds, this little support line. We've got copper down 1%. And I do think that we could come down here to 3.6, 3.5. Well, 3.5, yeah, 3.6, $3.60. Now, if this starts to dive bomb, if we dive bomb lower, I would be looking for a potential slowdown in the market. I can also draw this like this, something on the lines of that. And maybe we got a move lower. We'll see out of this. And if it is, and we see the 2-year diving, we're probably going to get a little bit of a slowdown. Iron ore down 0.07%, but again, I think this will go higher over time. This big pattern that's broken to the upside. We've got aluminum that's down a little bit. We're in this support zone. And again, if this starts to beeline to the downside with copper and the 2-year yield, and maybe we got a little bit of a slowdown coming. And that's why Powell wants to lower interest rates. Baltic Dry Index down a little bit, 6.6%, and we are coming back down at a lower level, surprisingly. The projected move here was all the way up to 4,700, but we are pulling on back. Newcastle coal up 0.8%, and we are still basing, and I like this location. It's probably going to take a little bit of time to base out, though. Give it some time. There's a lot of momentum that this thing's got to work work off. We've got Bitcoin down 5.5%, bearish engulfing with selling pressure yesterday. Is this support going to hold right where we're at? We'll watch it. If liquidity is coming into the system, we should see this go up. If we're getting a slowdown, this thing should really beeline it to the downside. Ethereum as well, down a little bit, but this still looks pretty constructive. Maybe we come back like that, and then I think we'll probably move higher in the short term here. So, but we're getting some selling pressure, probably a little bit of downside in the short term for Ethereum. So that's what I've got for today, guys. Give me a thumb up for the content, subscribe to the channel, subscribe to the website if you'd like. We've got the Sunday question answer session coming up. You can ask me whatever you'd like. I look at a bunch of different companies that people bring up. I share my opinions, mergers, acquisitions. I'll share my opinions on that. I know some people had some questions on the Southwestern Chesapeake merger, my opinions there. Some questions around, what sectors to look at. So we'll hit all that stuff this weekend. Sunday at 5 p.m. Mountain Standard Time is the time of it. So overall, uranium looks really good. It's got the momentum behind it, and it's been ripping. And if depending on what the interest rates do here, we could also see pretty good strength in gold, precious metals. They could also start to rip to the upside if we see continued weakness in yields. Maybe the dollar starts to drop too, depending on how strong yields come back. But one thing I will say is the 10-year and the 30-year looks strong, but the 2-year looks weak. Weird setup. Weird setup. And that's where it gives me um, not much confidence in knowing where this goes in the short term. And I think people are trying to digest all this. And what makes it even more weird is that these yields moved up to this level off synthetic inflation. There's a big chunk of synthetic inflation in this mix. And other um, other markets, other real estate cycles, they were driven by real estate. And right now we're in the middle of an expansion phase of real estate. Like we are in the strong part of the expansion phase, which makes me think that whatever slowdown we do get, it's probably going to be temporary. It's not going to be a great financial crisis. I don't think it's going to be anything like that. And it makes me want to hold through whatever does come for the other side. And I think the other side is going to be magnificent for commodities, guys. It's going to be magnificent. So that's what I've got. Catch you guys later. This is Finding Value.